Hey guys, welcome to another episode of the Ferrum Academy. My name is Tom from the marketing team here at Ferrum Network, and please welcome Ian, COO of Ferrum Network. Hey Ian.
Hey Tom, how you doing?
Well, it depends, right? Because we do have a lot of great things at Ferrum that we're working on, and those things make me extremely excited. But whenever I look at what happens on the market, it's not that great. So, you know, but. Well, what are your thoughts on this? What are your thoughts on the current market conditions?
Well, look, it's not easy. I mean, it hurts. It sucks. Everyone's losing money. If you held and you're not shorting stuff, you've probably your portfolio is down, and it's not fun at all. My overall feeling on it is that if you zoom out and you take a longer term viewpoint, that the short term fluctuations, the down markets, tend to hurt less. So that's what I always think about. Like, look in the portfolio, like, oh God, this is terrible. Like, world's coming to an end. And I just think to myself, wait, I came to this industry because I believe in this technology over the long term, right? It wasn't just to get rich quick and make a quick buck overnight. It's this is a long term, commitment from my standpoint anyway. And so in 5 years from now, this is going to be a distant memory, a little blip. This is going to be, oh wow, remember the time, remember that Project Terra, and it created that crazy like algo stable coin that blew up spectacularly. Wow, like what a time that was. And
Yeah,
meanwhile, Bitcoin will be at like 500K or something like that. We'll be like, wow, so glad I didn't sell then. So long term we're gonna be fine. Short term it sucks, it hurts, but we're gonna make it. We're gonna make it.
absolutely, absolutely. We all firm believers of long-term holding here at Ferrum. Definitely, we're here for the long run. But we're not here to discuss the market conditions. There's obviously plenty of different resources on that. We actually want to focus on a topic that's been going around the news and different websites and crypto forums for quite a long time, because there's a lot of things going on with XRP and their lawsuit as well. So the focus for today's video is actually crypto regulations. What can you tell us, Ian? Because by profession you're a lawyer, so you probably know much more about this stuff than we do. What can you tell us about why do governments actually want to regulate crypto that much?
Yeah, absolutely. So before I give my explanation or opinion on this subject matter, just want to have a disclaimer that nothing that I say is legal advice. I don't even practice law anymore. I retired effectively from the practice of law back when we started Ferrum in 2018. That being said, this was one of my crypto regulations and that sort of thing was something that I focused on, especially towards the end of my career and as a lawyer. And it's something that I have somewhat stayed on top of, but not, the extent that an actual practicing lawyer would have stayed on top of everything. But I can definitely provide some general opinions on the subject matter of crypto regulations and the laws that relates to crypto. So to answer your question, why do governments want to regulate crypto? Well, there's the sort of cynical answer, and then there's the answer that I think the regulators would give. So why don't we start with what the regulators would say?
Mm-hmm.
Because people, I think, need to make up their mind on this subject. So it's good to present both sides. The regulators would say that it's about protecting retail investors. It's about protecting the little guy. And actually, I think that the disaster, debacle, blow up of Terra, and UST is a prime example of why we do need some form of regulation to prevent some of these from happening. Because there are people, millions of people probably, or hundreds of thousands, I would imagine, that held that asset. Actually, they had the stable coin, and then they had their other asset, which they were like or interrelated. But if you held either one, I mean, God, you've lost your shirt. And the regulators don't want to see that. The regulators don't, and no one should want to see that. If I'm being honest, no one should want to see somebody else hurt financially. It's horrible, especially if you're someone who, put way too much into it, whatever, and lost it all. It's a terrible thing. So the regulators would tell you, look, it's to protect the little guy, and I think there's a lot of truth to that. The cynic's view would be something along the lines of regulators come from traditional financial industries. They may have an interest in the existing, status quo system, the centralized financial, like legacy, the legacy system of centralized financial institutions, and they don't want to see that challenged, and so they will attempt to regulate crypto out of existence effectively. I don't actually buy that. I don't buy that. I think, at least in the US, where we have a democratic system, you have people, there's politicians on both sides of that. And I don't think there would be enough political support to essentially destroy an industry that has created a ton of jobs, created a ton of wealth. If you look at the extent to which crypto has infiltrated or penetrated everyday society, at least from the standpoint of how many people hold these assets, you go on TV and there's commercials for exchanges now. Exchanges are sponsoring NBA teams, or they bought NBA stadiums. It's way too integrated in society, even though it's still early days. It's still too integrated, I think, for regulators or politicians to say, let's destroy it all. That would be, because that would of course be completely antithetical to their position of let's help the retail investor. If you destroy, people have billions of dollars, or, the cumulative amount of money in this is billions of dollars of Americans' money. And then you turn around and destroy the industry, those people will lose all their money. So I don't think that they're really out to regulate it out of existence. Maybe in some countries that they are, but I'm talking about more or less the States and Europe, like democratic societies. I think that they, for the most part, want to protect the little guy. And hopefully, look, we're able to do that, because no one wants to see people lose a bunch of money on a debacle like the Terra thing.
No, absolutely. Absolutely. It is heartbreaking when you read the comments in the news on different sides. People are devastated, and it's absolutely horrible, absolutely horrible. But now that I'm thinking about it, because you've already mentioned that it is safer pretty much for the crypto community to have some form of regulations, right, over crypto, that we actually quite need it. But isn't that, as much as I obviously agree with this statement, because I do feel like different also aspects of crypto, like exchanges, like the middlemen that help you get crypto as well, they need to be regulated 100% as well. And but isn't that on the other hand, obviously, isn't that a little bit against to the core idea and concept of crypto, of being decentralized, fully decentralized? What do you think?
Yeah, it's a fascinating debate. I think you could definitely make that argument that everyone should be completely responsible for their own funds and make their own decisions. And if they make a bad decision, like investing in something that wasn't sound, that you bear the consequences of that. That's kind of a libertarian viewpoint of it, and I think it's valid. It's an extremely valid point. For better or worse, that's not how our system is really designed. It's designed from the viewpoint that unsophisticated investors, are. It's just too great of a risk for them to essentially be left to the wolves who could take advantage of them. And especially when you're talking about, I get your point, particularly when you're talking about maybe decentralized exchanges, or if your own wallet gets hacked because you connected it to some scam contract that drained your wallet. Well, I mean, obviously, keep in mind, there's already regulations that cover that scenario, and it's a crime to commit fraud and steal. That's a crime. That's literally a crime that should land the person who perpetrated that in prison. So there's already regulations that cover crimes, stealing, and fraud, which is, lying to get an investor to invest and then, running off with the money. That's a crime too. So there's already things. Now, enforcement is another challenge because oftentimes you're dealing with people in different parts of the world. They're anonymous. It's on the blockchain. There is no really way to track it very easily. So there's an enforcement issue when it comes to some of those things that, the regulations are already in place, fraud and stealing. But there's also this side of, if a centralized exchange has custody of people's funds, and we can argue whether that should even exist in crypto, but it does exist. It does, and it's not going away. That those entities should be regulated to some degree. So if something goes wrong, they mess up, they lose your money somehow, they get hacked, whatever the case may be, they need to be responsible for that. The custody, because it's no different than a bank. It has their funds. That's why there's some of the FDIC insurance for $250,000. Something goes wrong. There's things in place to protect people. So you're never going to convince me that we should have zero protections in place for people, because I don't think that's right. I don't think that makes sense. But then there is this degree of individual responsibility that I don't think we should overlook either.
Okay, makes total sense. And I actually like how we've touched on different aspects and different angles of crypto and different businesses within the crypto space, because we've been talking about Terra as a project. We've been talking about crypto exchanges as well. And that's what I actually would like to discuss and explore a little bit more, is the regulations regarding the centralized crypto exchanges, most importantly, because they also store your credit card details, they do store your data, your contact information, all these kind of things. And then you have also projects, and as much as projects like Terra Luna that try to solve some DeFi problems basically within crypto space, right? There's a difference between some projects like that and projects like, move to earn projects like, let's say, DeFi that we've discussed in a couple of our previous videos as well, or Steppen. That's one of the big ones recently, and it's trending quite a lot. There are solutions that reward you for moving around and doing fitness and jogging and running and all this kind of stuff, right? And they have little apps that track it. They have basically those fun solutions, and they have a utility token as well. But that's it. I for some reason, it's difficult to obviously to describe, but I feel like those kind of projects are slightly different than the ones that are actually trying to solve real financial problems, or crypto exchanges that every single day, every single hour, probably there's millions and millions and millions worth of dollars going through, buying and selling and trading different tokens. What do you think of that?
Yeah, I definitely think the regulators need to look at each project or each category of crypto and apply a different approach to each one, because it doesn't make sense to just have, Steppen's a good example. People are earning when, they do certain things. So Steppen, it's not really custody of your funds in that case. The funds get, if you do something, you earn money, and the money sent to your wallet, which to my knowledge is non-custodial. If it is custodial, by the way, if Steppen actually does control everything, it just looks like you control it, but actually they control it, then it's no different than a Coinbase or a Binance, which is custodial. And they should, if something gets hacked or something goes wrong with Steppen and you lose all your money because of the mistake they made, well, there needs to be regulation to prevent that from happening. But if it's more akin to a non-custodial scenario where they send you money to your own wallet, well, look, there's regulations covering the fact that if they made a promise to you, and you fulfill that promise, or your side of that agreement. In other words, you ran and they promised to send you 100 tokens and they don't send you 100 tokens, well, that's fraud, unless they made a mistake and it was accidental. Fraud requires intent, obviously, but I guess the point is, depending on the scenario, non-custodial, custodial, maybe DeFi, non-DeFi, which is kind of the same, really, that's the same thing, really, ultimately, at the end of the day. The different set of regulations should apply. Now, the regulators may disagree. They may say, treat DeFi like centralized from the regulator standpoint, do KYC and make sure everybody's accredited or whatever. But from my standpoint, anyway, I think it's a very important distinction, because it comes down to, if somebody else controls your money, they should be held to a higher standard versus you having it yourself. It's like, it's not even like money in my wallet, in my physical wallet. If I lose my wallet, who do I do? What? It was the wallet. It was the. I have like some leather wallet. I forget the name of the company. Let's just say it was a Swatch or something. If I lose my Swatch wallet, and what, I'm going to go after Swatch the company because I lost my wallet? Like, that doesn't make any sense. But if it's my Bank of America account, if I log in there one day and all the money's gone because somebody did hacked or whatever, the Bank of America's got to cover that. And there's got to be regulations in place to ensure that they do have procedures and money set aside in case that happens, whatever. So I think there's a very important distinction, this custodial, non-custodial. But yeah, I think the regulators need to look at everything a little bit differently and apply reasonable, smart regulations for each.
Yeah, that's really, really good explanation. Thank you. And okay, so, well, at the moment, it's similar to crypto because there's a lot of speculation going on, right? And with moments like that, when massive projects that we all thought they're going to be fairly safe for investors, like Terra Luna, when they crash and when they do what happened recently, basically, we start having those discussions about regulations within the crypto space much more often, and everyone's involved in that. Everyone has their ideas, and everyone wants to find out more about that, definitely. But what do you think awaits us in the future? What can we expect?
Yeah, so we speak with lawyers and different people that are a little bit more in the know than I am, frankly, on the subject matter of what's coming next. But I think everyone has kind of coalesced around the idea that KYC is going to become a lot more prevalent in the industry, because I guess the feeling is, if we know who these actors are, that they're much, it's easier to catch them when they do something wrong. It's easier to, from the government standpoint, I think they're looking at things like tax evasion, and they're saying to themselves, well, people are making oodles of money. They're probably not reporting it. If we had KYC on these decentralized exchanges, we could collect a lot more in tax revenue, which I think is probably a fair point. So KYC, I think, is definitely on the horizon. For a specific example, Uniswap is under investigation from the SEC right now. I don't think that means they necessarily did anything wrong. I think the regulators are trying to figure out this space, and they're trying to ultimately craft guidance or regulations that strike a balance. So I think you may see them impose KYC requirements on, like, if you want to do a swap on Uniswap, you may have to do KYC. And I don't know how that would exactly work, because it's a decentralized exchange, and who is controlling that database of KYC? Is it Uniswap Labs? Is it, so it raises some thorny, tricky questions that I don't know the answer to. And who knows, they may come up with some sort of different, technological based solution to solve that. But I do suspect that is on the horizon. And you may also see, I think, look, you're going to see a push for either a new regulatory agency whose job it is to regulate all of crypto on all the different issues, or you may see guidance or rules or laws coming out which more clearly delineate which area of crypto is each regulator responsible for. Because right now you have at least 3 regulators that are implicated in crypto, in what happens in crypto. You have the SEC, who would normally, their province would be fundraising. That's like, why are they going after Ripple? Well, they're claiming Ripple did an unregistered sale of securities. So that's, they sold the Ripple token without registering with the SEC, and that's against, that's against law, or violates a regulation. And so they file a lawsuit on those grounds, and we'll see what happens. I suspect there's going to be a settlement or something, because from what I can tell, the SEC isn't winning with any like slam dunk rulings, but we'll see what happens there. So that's like, if you're raising funds, SEC would be who would be your regulator. If you are already launched and you've achieved decentralization, like an Ethereum or a Bitcoin, then another body called the CFTC, commodities regulator, would then take over and be your regulator, because you're then viewed as a commodity, as opposed to a security. So you have that. Then you have the IRS, right? Because people, they got to pay tax on the gains, so or account for losses, what have you. So you have 3 regulators right now, and they all sort of, I don't know if they're cleanly staying in their lane, and I think that's an issue that needs to be solved. The other thing too is, we need to prevent the kind of things that happened with Terra Luna from a manipulation standpoint. There's a lot of speculation that this was orchestrated by sort of you could say almost like an activist investor, like a very large hedge fund or some other, and this is by pure speculation. I have zero evidence to support this. This is pure speculation. But the speculation is that this was orchestrated by somebody with the funds to basically pull this off, where they would, they understood the flaw within the Terra Luna and UST ecosystem, whereby if you could essentially cause the price to fall, you could cause a depegging of the stable coin, which would cause Terra Luna to sell off its BTC holdings, which would cause the price of BTC to crash. And so if you could get that first domino to fall, you could short Bitcoin, because you would know that since they hold so much Bitcoin, and they're big players in the market, and they would start to liquidate, and that would cause a cascading effect of then that you have the leverage traders who have positions would get liquidated, and it's this cascading effect of the price going down. And that's what happened. And so if somebody in fact orchestrated this and did this and manipulated the market and caused hundreds of thousands of people to lose their shirts, I mean, there should be a law against that. Yeah. If there isn't a law against what happened today, we have a problem. And by the way, it's not just a problem for the people who lost some money. It's a problem for the whole industry, because there are entities, big players, that are looking to get a Bitcoin ETF approved. The SEC is, the agency that would approve that or not. And for years and years, there's been like 100 applications, always gets denied. Why does it get denied? The market's too subject to manipulation. It's too easy to manipulate Bitcoin. And guess what? The regulators were right. I mean, it sucks, because I always was like, that's lame. It's not that manipulated. The market's big enough now. You can't manipulate. Like, it's no more manipulatable than the stock market or the bond market, which may or may not be true. But they were proven right today and yesterday. It was if that's what happened, and someone needs to do an investigation. But if that's what happened, if somebody orchestrated this whole thing and manipulated to make themselves a bunch of money at the expense of little guy, that person, their entity, needs to be held accountable. And there needs to be laws put in place to prevent it from happening again. And then maybe we can get that Bitcoin ETF approved. We can get institutional money flooding in. That'll get your 401k can invest. Your pensioners will be able to have a position in Bitcoin through one of these ETF. Massive amount of capital will flow into the industry. We want this. We need this. But if people can, if big players can manipulate and cause Bitcoin to crash from 40,000 to 30,000 in like a day, Why would the regulator ever like let your your parents' pension money into this ecosystem? They wouldn't. So we need regulations to prevent what happened, with this and other forms of manipulation. I don't know what form that's going to take. There's people whose job is to solve this problem. I hope they do solve it, because I think it's going to be good for everybody at the end of the day.
Yeah, no, absolutely. And those were some great explanations and some great ideas as well. I'm pretty sure that a lot of people that are watching this, all can they do is actually just agree with you, because as much as we love the part of crypto being 100% decentralized, moments like this, they make us really understand, that there are a lot of people out there, anonymous people, that if it's true what a lot of us are actually thinking that happened to Terra, and what's going on with Bitcoin, this needs to be regulated in some way. It has to be. It has to be, especially that we don't want to lose this space. We don't want people, even retail investors, to turn their backs and walk away, because there are some exceptional projects being developed right now. They solve a lot of real life problems and issues, and we don't want to lose them. We don't want to lose the next generation of the digital age, which is Web3, the metaverse. We want this to stay here with us, and we want to be a part of it, and we want to develop the internet, and we want to make sure that the online world is also going to be extremely safe for everyone to join. So, Ian, on that note, do you have any final thoughts?
I think you put it really well. We want what's best for this industry. We want what's best for individuals. Unfortunately, there are bad actors out there, who don't have people's best interests in mind. And until we've solved that problem of humanity, of people being greedy and not caring about others, only care about their own self-interests, then if that's true about humanity, which it is, then we need regulations. We need regulations to sort of prevent those, or to encourage our better angels, to be at the forefront for all the reasons that you stated. We want this technology to solve problems, to help people, but we can't. It's apparent that we can't quite get there unless the bad actors are taken care of, and regulation is going to play a big part in that.
Thank you. And Ian, just one final word for me as well. We've just very recently released a specially dedicated page to Crucible, where you can find all the information, all the articles, videos, and podcast episodes on Crucible. So you can dive right into the DeFi 2.0 world with us. And also, you're able and allowed now to sign up for the Crucible beta waitlist. Do not hesitate to do it. Literally just go on it, drop your email address, and be a part of building and developing the DeFi, the most revolutionary probably DeFi 2.0 product, which is Crucible. The link is going to be in the description as well. Ian, thank you so much for joining me here today. Thank you for discussing this urgent and extremely important matter in the crypto space, which are the crypto regulations and everything that we've recently been seeing. Thank you.
Thanks, everybody. See you soon. Bye.